Desk, I'm Jeff Lesson. For more, 971theticket.com.
The following is a paid program. Views expressed on this program are not necessarily those of CBS Radio, its sponsors, or affiliates.
Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm Harvey Freed. Next to me, Harry Glanz.
Morning, Harv. How's it going?
Fantastic out there. I can't say it's shaping up to be the best-looking weekend, but it's still warm and looking pretty good. And, of course, we bring in from Royal Oak, Dan Dubensky, Skyward Realty. Good morning, Dan.
Good morning, guys. Yeah, it's a beautiful week, and then get the weekend, and what do we get? Rain now, huh?
Listen, we cannot complain about the weather this summer here in southeastern Michigan.
No, it's been
There's
great.
no way. It's been a great summer, and the problem is that we're just spoiled, because it's going to be February pretty soon. It's going to be. You're going to wake up and it's going to be 20 degrees out.
Ouch. I'm not even thinking about that.
So we get spoiled. We want this to last forever, but Harvey, you talk about it all the time. We enjoy the four seasons around here. People love it. We have the best places to go up north. You can play golf. You go fishing. You go hunting. Southeastern Michigan is a great place to live.
Just fantastic out there. And again, it might only rain, spotty showers this afternoon, maybe some more rain later. So go out there and give it a go. As we know in Michigan, the weather can change very quickly. And of course, mortgage rates can change very quickly. Still holding at all-time lows. As we know, rates been pushing back against the last 2 weeks. Actually been pretty good. About 2.5 weeks ago, there was a little bit of uptick in the mortgage rates. Hey, good news is when bonds are selling, of course, rates are lower. The favorable rates have not been the answer, Dan Dubensky, for the lack of inventory in Southeast Michigan. And you came in this morning and said, no, Harvey, I got something contradictory to that.
Well, I like to bring these charts in to back up what I say.
Yeah.
It's nothing really too surprising. We have come June, when school gets out, we have an influx of new listings. So if you see, we were down to about a 2-month supply earlier in the year, and now we're up to about a 4-month supply.
Okay.
But what that doesn't mean, though, that these are all saleable listings. A lot of people are just jumping on the bandwagon here thinking, wow, my neighbor got this. They're going to see what they can do and kind of, test out the waters.
Dan, we talk about that every week. And, one of Alex is on vacation. He's spending a little time out west. And he always says, there's a lack of quality listings. And don't just throw your house on the market to see what you can get. I have a little bit different take on that. And Alex and I like to go back and forth on that. My opinion is, why not throw your house on the market and see what you can get?
Well, worst case is that you don't sell it. But
right. That's it. So, and if you do sell it, you could, at this point in time, because it is a seller's market, you could score really big. But the question is, where are you going to live?
Right. And you're going to find, though, that the tendency to the homes that people are just putting on the market to test the waters, they're overpriced. They're trying to get above and beyond, and if someone gives them the right dollar amount, they'll pull the trigger on it. So you're seeing some overpriced homes. You're seeing homes that people really have to sell, but that goes back to when we write an offer. And I tell all my agents, look at the motivation of the seller. Do they have to? Do they have a job transfer? Are they? They want to. Have they already bought a home? What's the situation? And that will determine how you write the offer.
Well, so when you write the offer, and I was on the phone with the client last night about 9 o'clock, and he said to me, he goes, "I want to put this offer in. The house is listed at X. I want to offer them X plus about $9,000." I said, okay, but there's going to be other offers. He said, yes, allegedly there's 3 other offers on the house. I'm the 4th offer. I said, all right, so not only do you have to offer X plus, but you have to give another incentive. He said, well, like what? I want to offer, 30 days to close, which is reasonable,
right,
and I want to give them 30 days of free occupancy. Now, how do you feel about that?
I think anything you can do to make your offer stronger certainly helps. And we've always talked about, the contingents are the inspection, the
right,
mortgage. We're not touching the inspection. We need to do the inspection.
You have to do the inspection.
Yeah,
and we talked about that. I said, you have to do an inspection. You have to check things out. The however is that if he's giving 30-day free occupancy, and to everybody out there, what that means is when you sell a house and you don't vacate that premises on that specific day, this buyer is going to give you, the seller, 30 days to live in that house for free. So you're saying, well, Harry, Harvey, and Dan, what's the big deal about that? Well, here's the thing. At closing, you don't own that house anymore. So you essentially have to rent it back if you're going to stay. And that's a per diem. It could be anywhere from, $20 to $80, $90 a day. So you're talking about anywhere from, $600 to $2,700 for a month. It's a month of rent essentially that he's giving back. So Dan, that will entice a seller to go with that offer versus another offer.
Without a doubt. Anything you can do, and we do that with the possession time. But more importantly now, what we're dealing with is these appraisals and them coming in too low. So if
man, let's talk about that. I'm glad you brought it up. I didn't have to bring it up, Harvey Freed. Go ahead.
Well, if we have if I say it's my listing, my sale, right, and we have multiple offers, and they're all kind of nice, what I want to do is I want to approach all of the purchasers, and ask them, if the home doesn't appraise, what are you planning on doing? Are you planning on bringing the money to closing? And
right.
Because that is huge. We all know now that if it's multiple offers, the price is going to probably be inflated, and now the appraiser might have a tough time getting there. So if you address the issue ahead of time.
Right, and we know that's going to happen. And there is a statistic out there nationally right now, about 25% of the appraisals that are done are not coming in at the purchase price because the purchase prices are over and above the pre-existing property values, okay, the sales prices. Here in Michigan, it's going anywhere from, say, 10 to 15%. At Capital Mortgage Funding, it's between 5 and 8%. So all that means is, in our area, we're seeing a little bit lower because, as we've said on this show many times before, we're always the first ones to go into a bad time and the last ones to come out. So we don't have those swings that have been going on in the market.
Right. But it's still a function of the market and it being a seller's market.
It's going to happen.
Driving the prices up.
We have to realize that the A word, appraisal word, isn't a bad word. Right. It's going to happen.
And you can spin it a couple different ways. If I'm representing the buyer and the appraisal doesn't come in, right? At that point, we've already knocked out all the other buyers because we got the deal accepted.
You're done.
And we wanted them to sit inside. Now we come to them and say, listen, we would have gave you what they wanted, but the bank's not giving it to us. Right. And if they haven't addressed that issue ahead of accepting the offer,
Harvey came up to me. Harvey was in my office this past week, and he said to me, listen, I said to my buyer, here's the deal. You offered and you're buying a property and you're paying the highest amount. Other homes haven't sold for this amount. You bought it for $7,000, $8,000 more. It's not a big deal. It's a lifestyle thing. And Harvey went over this tooth and nail, didn't you, Harvey?
Yeah, actually, sure enough, and I don't mind using the correct number. So $264,900 purchase price, $258,000 appraisal, and at the end of the day, they negotiated it last night to $260,000. So they are going to make a transaction happen. And more importantly, what I like, what you said, Dan, is this is being addressed up front. So the top agents out there across the globe, across the United States, and more importantly here in Southeast Michigan, top agents like yourself, they're addressing these items ahead of time. They're showing up with addendums. The listing agents are even presenting these addendums back to the sellers and saying, hey, the selling agents and saying, hey, I'll take your offer, but here's what the minimum is. We'll take your overbid price, but here's the minimum we're selling the house for. And I like how we're addressing these up front now with addendums and conversations.
Well, it keeps the transaction moving forward, right? If we come in and say, listen, we're at $250,000, but we'll accept a $225,000 appraisal, hey, that's huge to us. That's great. If the dollar amount's close to any other offer, we're going to go with them for sure.
And Dan, this is not a foreign conversation. This isn't going to be news to anybody that you have to have. This is not a tough conversation.
Well,
it used to
buyer,
be
yeah.
Right. It used to be that maybe an appraisal wouldn't come in once in a while, so it was a tough conversation to have. No, this is in the lexicon of all conversations now.
Yeah, 25% of the actual purchase transactions are potentially showing shorter appraisals.
That's right, and people are aware of this. This is all over the news. It's all over real estate. It's all over finance. It's all over in every walk of life that you're talking about buying and selling something. These things happen every day, and sometimes we act as if it's unbelievable news. I can't believe it didn't come in. What are you talking about?
It's so important that, for the past 3 years, my agents, I tell them, if you have a lockbox on the house or not, once you have a property under contract, take that lockbox off. When the appraiser calls, say,
meet them out at the house.
That was an appointment-only property. I'm going to have to meet you over there to open the door.
Dan, I used that this week on an agent. It is absolutely brilliant. You've been talking about it for at least the last year, and I think it's the smartest thing out there. Again, if you're missing the opportunity because of the Dodd-Frank, we are not allowed to speak to the appraisers directly. We don't talk to them.
Right.
So this gives you, the listing agent, the opportunity to meet the agent at the house. Again, there's no lockbox on the house, so once your offer is accepted, you pull the lockbox off. off, you meet them there. It gives you a couple minutes to, hey, make things nice for them. Why not? What appraiser who's in a hurry would not want some help with comparable sales and maybe some additional information about the home?
Yeah, all I do is hand an envelope to him, let him do his thing, right? And if they want to talk a little bit more, we talk to him. Right. But most importantly, what I say at the end is, would you do me a favor? If you have a hard time coming up with a value, would you give me a call before you turn it in?
There you go.
That's all I ask him to do.
Fair enough. All great stuff today. 248-539-9797. We'll give you 1 hour to the Hardcore Mortgage Real Estate Business Show. Brought to you by Capital Mortgage Funding at 1-800-LOW-RATE, the best mortgage banker. Let's go to a call this morning. Got out in Lake Orion. Walter, good morning. Welcome to our show.
Oh, thanks, guys. Quick question is, I have a rental, and I'm debating selling it right now because how the current market is.
Yeah.
So how long do you it's impossible to tell, but how long of a window do you think I have to make a decision?
Well, I want to jump in with this first is, I love the cash flow on rental property, so that's the key with it. Again, I don't know your whole background. Do you have a mortgage on the property?
Yes.
And what are you netting each month from the rental?
Right now, just $150.
Yeah, I'm not fond of that. $1,800 a year. The hot water heater goes, and that costs you $800.
Is it worth it for you to keep it? I mean, do you like it? Do you want to have it, or do you just want to get rid of it?
It's like the renters that are there right now are the greatest renters ever. But it's and I looked into refinancing, and the difference is only like $250 a month what I would get from it, but. So basically,
that's a lot of money.
That's a lot. That's cash flow. You're going to go on top of your 150.
Are you going to tell me you're going to go from you're going to add 250 to the 150 and go up to 400 a month net?
No, that'd be total. It'd be like
are you talking about 2 years? Just going from 150 to 250?
That's not too bad.
I don't know if you like the property and you have good renters in it, and it's netting you a positive cash flow. I mean, what's the property? What's the property worth?
I'd say about 130, 135 right now.
And what do you owe on it?
95.
Yeah, so you take that money and you could put it probably somewhere else and make a better return than your $250 a month.
Yeah, that's what I'm thinking too. I didn't know if it would be worthwhile having them pay down the mortgage for another year, or if another year the market will be on the decline.
Yeah, well, if you can test the market, but what I would recommend you doing is if you said you have the greatest renters in the world, I would let them know. I would disclose to them that you're going to put the house up for sale. And
we already let them know because we prefer if they bought it, but I told them they got months.
All right,
we're not going to do anything.
Well, good. Then you know what? I'm in favor of you testing the waters. Test the market out and see what you can get for that property.
There you go. You might be able to put $25,000 in your pocket. It's a great call, Walter. We'll follow up with you right after the show. Hey, if you want to be one of our callers calling in here, 248-539-9797. Tons of information. Keep it here on 97.1 The Ticket.
97.1 The Ticket. You're guided, you're directed in the right way, even if.
Hi, Harry Glanz and Dan Burke for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Grosse Ile, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
All righty, welcome back to the show. If you're just joining 9:16 on a gorgeous day, boy, it's already July 15, 2017. Again, if you're going to get out there and look at houses, make sure you get that approval letter. Call Capital Mortgage, 1-800-LOW-RATE. Get a true approval letter in your hand. You can speak to our professionals. You can come in and meet with us one-on-one. We've determined this several years ago that knowledge is the key to successful home ownership. It's not about hitting a button. It's about you sitting down and truly putting a plan together, just like anything you do in life. Putting it together a great plan.
Guys, it's a very important purchase. It's the largest purchase you're going to make in your life, okay? You have to have a relationship. You have to set it up for success, and it has to be tailored for you. Okay, there's no carbon copy, homogenized situation.
Right,
where
every transaction
everything's
is
good
different.
for everybody. It doesn't work that way. It has to be good for you.
Yeah. Totally. Good way. So call Capital and get that information. Again, Nicole, we talk about it often, how many great programs there are out there, including there are 3% down programs. One of the situations most recently is 3% down conventional loans through Fannie Mae and Freddie Mac. They have income limitations for a while.
Just recently,
Freddie Mac changed their Home Possible Advantage. So now what we have to do, just over the last 30 days, we're actually punching in now the address of the home that the families are buying. So if you went in thinking you're a 3% down conventional buyer, all right, so you might have to come up with 2% down more. That'll be more equity you have in the house, and you're still able to purchase that house.
It's still your money. And, I had a situation a couple weeks ago where my client got a raise mid-transaction. And unfortunately, put them above the income limit.
Yeah, threw them out of that program.
And it's nobody's fault. It's a good thing you got a raise. Unfortunately, it's a different product now. You can't do it.
Yeah.
You got to put down 5%. Big deal.
Yeah, there's a lot of
flex. It's still your equity.
Right. And there's, like you said, Harry, not every situation's identical. And there are mortgages available. I wrote it down on my third page here because there's so many opportunities out there. If you had a foreclosure in the past, again, so many families went through this horrible time here, the recession, of course, of 2007, basically to 2012. You might have had a foreclosure, a Chapter 13 bankruptcy, a Chapter 7. All those situations are different. Again, if you did a Chapter 7 and put the house in the bankruptcy or you didn't, that's a different situation. But there are opportunities for families. Again, if you're out of that bankruptcy, one day out of a Chapter 13, you can get approved for an FHA mortgage. And more importantly, 4 years and even 3 years out of a bankruptcy, you can go on a conventional mortgage. So lots of opportunities out there to get a mortgage, become a homeowner.
And a lot of buyers, that had suffered back when we had the Depression.
Yeah.
I call it the Depression.
Yeah,
they're now, they are coming back and they're buying and they're.
That was good.
Wait, did you just say absolutely? Yeah. Every time Alex says it, I get to punch him.
Yeah, there you go.
Who's going to get it?
Go finish. Sorry, the Depression. Go ahead. Go.
She forgot her thought.
Hey,
now you made me forget.
Wait, that's a different show. Is that Freudian?
Ooh.
What?
Nothing.
Not at all.
Now she's completely lost.
What I'm saying is those people are now restructuring.
Those people.
Can you say
people,
that?
Those families.
Say that on the radio.
Okay, he's confusing me. So the people,
that's difficult.
He won't stop.
You guys,
I can't even say it. I need to be switched over.
We're talking about the budget of these families. Obviously, they went through some hard times. Did they learn their lessons? Generally speaking, when someone goes to a Chapter 7 or a Chapter 13, you pretty much took your lumps, and now you're looking to restructure
I feel
life.
like that's a very good lesson, and I feel like a lot of people are now restructuring their life. They know their limits with it, spending, things like that.
Well, but Harvey, you said it. The key is recognizing somebody's situation because, again, everybody's situation is different.
Right.
Just if your brother-in-law did something, that it might not be right for you. If your friends are doing something, it might not be right for you.
Welcome back to the show. If you're just joining us, it is the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. You can call us all day long at Capital Mortgage, all week long at 1-800-LOW-RATE, the best mortgage banker. That's 1-800-569-7283. Of course, here live in the studio at 248-539-9797. Harvey Freed, Harry Glanz, and Dan Dubensky from Skyward Realty giving you 1 hour's worth of the Hardcore Mortgage Talk. Let's move off to Michelle on a cell phone. Michelle, thanks for calling in. Go ahead with your call.
Oh, hello. Good morning. How are you?
Very
morning,
good.
Michelle.
Thank you.
My husband died last year, and I've acquired quite a mess. And currently I found out I still don't have a death certificate from Canada where he passed away, so it's paralyzing me from closing out some other parts of the estate. I found out yesterday that on the home we own in Hamtramck, I'm not on the mortgage. I found the original paperwork from 99, and he is listed only as the borrower, and I'm listed next to him, but I could have walked away from it according to what I found out yesterday. And I'm not quite sure what I should do in this situation. People are telling me to walk away, but then I've been paying the mortgage for the whole year, and then I gain nothing. Then other folks say I should just pay off the balance of the mortgage if I can get financing or borrow and try and sell the house outright, because right now I'm on the deed, but not on the mortgage.
Good. So chances are, Michelle, we'd like to take a look at the paperwork, and I'm not in favor of anybody telling you to walk away from anything unless they know your situation. So we'll have to take a look at that. That's number one. Number two is if you have a real estate attorney or a family member that's an attorney, you might want to run the paperwork by them. And number three is that there's a difference between being on the mortgage and being on the note. So the promissory note is the loan itself. So are you on the promissory note? Are you on the loan? The mortgage, as a spouse, you're on the mortgage, which means that you should be on the title to the property. You should be entitled to the property. So
I am. I'm on the deed.
So then you're fine. Then that's fine. But what you need to know is you need to find the paperwork, the note, the promissory note, and see if you're on the note. And what we'll do is we'll take a look at those documents for you, and we can advise you properly like that. And remember, we're not attorneys. We don't play them on the radio either. But we know a little bit about the mortgage business, and we can certainly point you in the right direction. But when somebody tells you just walk away, now, do you live in this house? Is it your primary residence?
I kind of cleaned it out because it was my husband's family home, and so I've kind of taken out, 69 years worth of stuff. I've ripped up carpet. So it's in the process of being transitioning.
All right, so you want to sell this property. I mean, what's the property worth? Do you know?
I have absolutely no idea.
Okay, well,
I mean, it's Amtramck.
Yeah, we can help you out with that too. We can take a look at the property value, but we have to ascertain if you are on the loan, if you're on the promissory note, and it's your obligation that you have to continue to pay that.
Okay, I'm on I have been paying it because I didn't want to get a bad credit. I'm looking at the paperwork. What does the promissory note look like?
It says on the top, note.
I have settlement charges. I have mortgage report form.
Yeah.
I have mortgage.
It should be on there. We'll call you after the show. We'll take a look at it. Maybe you could send it to us by email. Maybe we can meet in person. However, we'll take a look at that whole package. Keep that entire package together. And
I have it.
And we'll take a look at it for you, okay?
That would be wonderful. I thank you so much.
Certainly. Thank you for calling.
Michelle, I have a question. That house wasn't rented out? It was...
No, because I had a hard time disposing of the items because, my husband and I had no children. I had a hard time cleaning it out, Married 17 years, I was getting rid of my husband, and I had a hard time with that.
Okay, well, it sounds like you could either turn into being a landlord or you could sell the home, and hopefully there's some equity in it. But we could, after the show, give you a call.
Yeah, we'll have to take a look at all that for you.
Thanks for the call, Michelle.
Thank you. Bye-bye now.
Thank you, certainly.
Sorry,
that's a great call. That's a great call because you know what? It happens. I mean, you go through life and somebody takes care of the bills, somebody takes care of, the assets, and guess what? They're not there anymore.
It's unfortunate, obviously.
It's terrible, and you have to figure these things out. And she's right. You have to have death certificates to close things out, and there's proper paperwork and documentation. And when you're firing through all these documents, they're all the same. They all look the same, and you don't know what they say.
But the bank, if I understand correctly, she can continue to pay. The bank would not.
Well, she's on the title to the house too. So
yes, she can. She's on the title.
Yeah. Okay, so she can keep doing what she.
It is her asset. I mean, it's her asset. Her and her husband own the home. Right. She's on the deed. They're entitled together, and he passed away.
Well, that's
so rights of survivorship go to her.
Right.
If it was titled that way, but I'm going to say 9 times out of 10 it was.
Unfortunate, but it reminds us that we have to have more estate planning going on. And yeah, it reminds me to bring back the attorneys here and the trust attorneys to come back on the show. So definitely anyone out there listening, learn from this kind of stuff. Yeah, put together the proper wills and estate, and I should learn myself. I got some work to do on that.
I want to take a look at that. I want to take a look at the paperwork for her and just kind of make sense out of it for her. And it's something we do every day. And again, we're not attorneys. We don't play one on the radio. And we'll get it together for her. We know a little bit about the business.
Of course, values have come back, so hopefully she's got some equity there. And if they don't want to keep the home anymore, she can sell it and maybe walk away with a few dollars. 248-539-9797. Definitely like to hear from you. Home purchases are just doing dynamite. You got to get that approval first. That's the key. We've run into this, and I'm getting a lot of calls from other companies or clients that want to get a mortgage. They've got their offers in, and now they're finding out they can't get approved. You really have to sit down. People have sticky situations lately. That's what I'm finding out is, you might be moving from one job to the other. The old job potentially was a W-2 straight job, an hourly job, or a salary position. Now you've got commission and bonuses tied into your income. That can be a severe problem when you're applying for a mortgage. So I'm just noticing, and I'm sort of reaching out to families out there listening, the listening audience, to say, get a true approval letter, get your documentation all together, sit down with a true mortgage professional. That way you have a plan and you can move forward with really a lot more confidence. And again, I've seen it in the 80 to 100,000, and I've seen it up in the $400,000 or $500,000 range. Nobody's really taken that time to get the true approval.
Well, here's the thing. There's so many different pre-approvals, pre-qualifications. What should happen is your agent should call whoever that offer is from, who wrote that pre-approval, and ask them, is this really a pre-qualification, a pre-approval? And the languages can all be different, but what we want to know is, have the people given you their paperwork, the tax returns, or is this all verbal? Because from verbal to actually seeing it in print can change a lot of things.
We review tax returns, we review bank statements, we review credit reports, we review all the assets and, pay stubs. So, I mean, come on. I realize this, and maybe we're spoiled, and I tell Harvey and all the guys in our office, ladies and gentlemen in our office, I say, I don't want to go out in the real world. I like what we do in our building because I know we do it right. I can't believe in this day and age people are still issuing those pre-qual letters that don't mean anything.
Yeah.
Right.
But it happens.
Well, as far as I'm concerned, when we get one from Capital Mortgage Funding, it's as good as cash. I mean,
well, you have to say that.
Well, but it's true because, I mean, to tell you the truth, the big banks, those are the ones I get worried about. When we see something with the bigger banks' names on them,
we're not allowed to say the people at the banks aren't licensed like we are because that would be a negative conversation.
Don't want to say
that'd be a negative conversation. We don't want to have that. We want to have a positive conversation, but we have to be licensed, bonded, insured. We have to take continuing ed. We've taken all the state and national tests and we're testing. And don't get me wrong, it's not difficult to pass a mortgage test. Trust me.
Right.
Well,
okay.
Again, there's so many
real estate test.
so many opportunities.
But they don't even
out there.
take a test. They don't even take the test at the bank.
Which is crazy to me. I mean, but you think you go to a big bank, you're going to get the best service. Not the case.
Not always. All right, we got so much to share with you. We're going to get back and talk about down payment requirements. I mean, there's programs 0 down, 3%, 3.5% down. Keep it here on 97.1 The Ticket. We'll be right back.
97.1 The Ticket.
Hi, Harry Glanz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Welcome back to the show. If you're just joining us, it's 9:32 on a gorgeous day outside. Make sure you get out there and call your real estate agent first. Get that approval letter in hand. Call Capital Mortgage, 1-800-LOW-RATE, the best mortgage banker. That's 1-800-569-7283. I know we have a full office of loan officers all morning long to help you. And again, sort of get you through all the ins and outs, and there's a lot to know about home mortgages. Let's move off to some calls now. If you'd like to join the show, 248-539-9797. We've got Harry on the line from Rochester Hills. Good morning, Harry. Go ahead.
Good morning. How you people doing?
Good morning, Harry. Is that your real name? Because that's my real name. I'm not a Harold or a Henry or a Hank or whatever.
You said it right. There you go, Harry.
Harry, that's it. All right, brother. Let's do it.
Okay, brother. Please help. Okay. So I'm going to try to sell a house. I bought it in 1995. I'm going to try to sell it by myself for a couple weeks. And anyway, if I happen to get somebody who's interested in the price I put out there, and I know a lawyer that helps handle for sale by owner. That's what he kind of specializes in that. The question is this: on the disclosure form, I haven't seen one of those forms in a long time.
Yeah.
Do you know the current form? Does it ask for? I know there's the questions about water damage and things like that.
Yes.
And, is there a specific question on that form that asks? Is your house in a federal flood zone?
Yeah, Harry, I would tell you this.
There is a question to ask if you're in a flood zone.
Yes, there is. And from one Harry to another, it's better to disclose everything that you know than not disclose.
Oh, yeah. Oh, for sure, no problem.
So, yes.
I know that.
So
that's a legal thing there.
Right. So you should disclose that it's in a flood zone, and there could it could quite possibly need flood insurance.
Yeah.
Because the lender's going to know when they.
Yeah.
Right. We're going to do an appraisal, or a lender's going to do an appraisal, and they're going to list, appraiser's going to list it that you are in a flood zone, and they're going to attach a flood zone map.
So FEMA made the changes again about 4 years ago. As you know, these floodplains change quite often, especially here in Michigan. And yes, some families that were not in flood zones are now in flood zones, and vice versa. There are some families that weren't. Yeah, it's worthwhile. Did you have a situation where this came up before? And do you know that your house is in a flood zone?
Yeah, let me explain that. I hope I can get an adjustment on that. Like you say, there have been changes. What happened in my situation back then? I also bought the house for sale by owner, so nobody at that point, 95, maybe things were a little bit lax or something. And as I recall, I didn't even find out that it was in a flood zone until
the lender told you.
Exactly.
Right. Well, that's the only way anyone actually typically finds out. It's a good warning to cash buyers out there. Cash buyers sometimes find themselves not ordering title insurance, not doing their due diligence, not getting a flood cert. A flood cert literally is under $10, and it's through the the FEMA.
Hey Harry, also you can do what's called an elevation certificate, which it's about $350, and someone comes out and they actually measure the
was it the floodplain versus your
right, to see if they can get it out of the
flood.
Correct.
Baseball tonight right here on 97.1. The Ticket, 7:05. Tigers and Twins from Target Field. Jordan Zimmerman pitching for Detroit. Tigers 6-3 winners last night. Anibal Sanchez goes 5 2/3, giving up 3 runs. He gets the win. Victor Martinez hit 2 home runs for the Tigers. Tiger star Miguel Cabrera took a hard grounder to the chest, had to leave the game in the 5th inning yesterday. X-rays were negative. He's listed as day-to-day. Red Wings left winger and the leading scorer Thomas Tatar re-upped for 4 years and $21.2 million. At the Open Championship of Royal Birkdale, they're through 2 rounds. Jordan Spieth is your leader by 2 shots over Matt Kuchar. The Detroit Lions have hired Barry Sanders as a brand ambassador, and according to reports, the NBA's Kyrie Irving has asked the Cleveland Cavaliers to trade him. At the Ticket Update Desk, I'm Jeff Lesson. For more, 9701theticket.com.
Winners and losers are welcome here.
97.1 The Ticket.
Welcome back to the show. 9:32 if you're just joining us. It's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. 1-800-LOW-RATE, the best mortgage banker. Also, you can send us an email to mortgage.show@lowrateonline.com. Always find us at Capital Mortgage. 248-LOW-RATE. That's 248-569-7283. We got some calls that are lighting up, and there's a lot of good information we still have to get to. But let's cruise out to Brian out there. Brian, you got an interesting question from Waterford. Go ahead, sir.
Good morning, sir. Good morning, or gentlemen. Quick question. What's your opinion of rent with the option to buy?
Well,
is there advantages and disadvantages?
Yeah, there is. It's worked out for some families. There's no doubt about that. The problem becomes you get tricky with it. At the end of the day, it's really security for the seller of the home. Why? Because instead of renting it to a person who has no interest in the upkeep of the house, they're renting it to you who potentially will buy it one day, 2, 3, 4 years down the road. But the future is sort of unpredictable.
Well, Brian, are you finding right now that you have a seller willing to sell you a property with the rent the option to buy, or what do you have?
You know what? To be quite honest, I'm not in that predicament at all. You know, I'm just
right
a few years away from and I'm just exploring my options as well.
Yeah, it's not real prevalent right now because the market is so hot. Usually, a rent with the option to buy comes into a play when a seller has a hard time selling a property. Dan Dubensky, you want to chime in on that? I mean, right now we're not seeing a lot of rent with option to buy.
No, we're typically not. Okay. Usually that's for purchasers that can't qualify for a mortgage. And what happens is there's 2 things. You have to, a lot of times you'll put a chunk of money down for that option, or a portion of your rent will go towards that.
Yeah, you get credit for that, and that has to be spelled out in the document. But two things happen, like Dan said. One, the market's not that hot. People want to sell a house, but they'll rent it to you with an option to buy when you can qualify for the home. When I say you, when a buyer, a potential buyer, has a hard time qualifying for a home, so they'll give X amount of the rent as a credit to a down payment or an equity position that they'll go ahead and credit you at the time that you're going to buy the property.
Yeah, and an option is just as good as an offer. I mean, so you have to usually you determine the purchase price now to close 2 years from now, and
Yes.
you know that if things go right, appreciation, you should be sitting pretty. But what happens then is a lot of times it's hard to get the mortgage on it because you guys don't see that money that they use for the rent.
Things change.
If we can track it, there's no question about it. We have to document it, so when it's in the purchase agreement, we can track it, and it says, just for round numbers, it says $200 a month goes toward the down payment of the house. We could certainly track it that way.
Yeah, that becomes very confusing. So I would tell people to give the professionals a call ahead of time. And the most recent one I did, it was when times were a little bit more difficult. And they actually they gave a large deposit, earnest money deposit of $15,000. It took us an extra week or so to get a copy of that full bank statement and to show that money had cleared the account and that the money was the borrower. So it can get a little tricky. I think it's a great call, Brian.
The question is a good idea. It's a good idea if the terms are great and the price is good. Then it's a great idea. It's a bad idea if it's the terms aren't good. So that's what it comes down
at
to.
this point, it doesn't sound like anything that I would want to do, but I just figured I would ask. I don't think I like that idea.
Well, thank you for the call.
We appreciate the call. Thank you. All right, we'll definitely be following up with him and give him a real approval letter and show him instead of renting what a great thing it could be to become a homeowner here and how easy it is. Before we went to the break, again, talking about all the different great programs that are out there. There's so many opportunities, including we offer MSHDA loans. So if you don't have any money to work with, you can call Capital Mortgage Funding, 1-800-LOW-RATE, and we'll get you set up even on a MSHDA loan if you qualify for that program. So lots of great things out there. Let's move off to Jim and Adrian. Good morning, Jim. You have a question about refinancing on some land. Go ahead, sir.
Yeah, I do. I want to try to refinance my home. I'm living in a 3-bedroom, 2-bath home and appraised at about $140. Now, it's on a half an acre. I just bought 2.6 acres. That gives me a nice square 3.2 acres. The parcels are still split right now, and I think I'm going to annex them together because I think I have to in order to borrow any more money on it. You understand what I'm saying?
We do understand what you're saying, and you're going to have to get the city, the township, the municipality in that area to go ahead and agree to go ahead and put it on one parcel ID number.
I don't like that idea. I'll tell you.
I like it split, but that's okay. But I hear what he's saying.
Yeah, I mean, at this point, Jim, to spend the money, if you own the property and it's adjacent to your property, this still gives you an opportunity to potentially sell it later. It's got a separate ID, parcel ID number, separate tax bill. The tax bill's on vacant land. I wouldn't jeopardize that. I would leave it the way it is and give yourself an opportunity to potentially sell that land in the future.
But you can't borrow. I can't borrow on both properties being separate.
Well, look, you're gonna hear. Here, let me give you what you don't want to hear. Let me tell you what you don't want to hear. Vacant land isn't worth as much as you think it is. That's what I'm going to tell you. Unless it's next, scratch that. Unless it's next to a oil well, potentially. That's what scares me.
Mine is actually.
Yeah. Well, then mine.
Of course it is. Of course, yours is the one that's worth the most.
Yeah, we so often will hear from a family, but look, hey Harvey, I also own that 5 acres next door. Isn't that going to make my house worth another $50,000? And it just doesn't correlate that way on an appraisal. So I still like the idea, Jim, and we'll follow up with you. Potentially keeping these separate. I like the idea that you keep them separate.
I do too.
All right. Hey, thanks for the call. 248-539-9797. We'll keep rolling on these calls because there's some good stuff out there. Got Ed out there in Sterling Heights. Good morning, Ed. Welcome to our show. Go ahead.
Hey, good morning. How you doing today?
Real good.
Morning,
Thanks
Ed.
for calling.
Yes, I got a question about, I filed bankruptcy back in November 2015, and I want to purchase a home, and I'm wondering, well, with that bankruptcy, it's all what they call closed out and everything, but it's still on my credit report.
Yeah.
Are there any financial institutions that'll work with me?
We got a lot of questions to ask you. First of all, is it a Chapter 7 or 13?
Chapter 13.
Oh, interesting. You gave a great answer. Has that been discharged?
Yes.
It discharged November of 15.
Discharged on November in 2015. So, yes, you can apply for an FHA mortgage now.
Okay.
So, yeah, you're a great call because are you currently renting?
Yes.
Yeah,
I
forget
am.
about that. Tell your landlord no more paying his mortgage. You're going to be getting your own mortgage. Have you reestablished credit, Ed? That's really key to this. Have you reestablished some credit?
Yes, I've reestablished. I'm in business for myself. I own my own truck semi, and I've got a car finance. I had this truck finance since actually December of last year. So I got credit established.
Oh, great. And how long you been driving the rig for? How long you been driving?
Well, I actually been driving for 20 years.
Out there.
But I've been an owner-operator for about 10 years.
Well, good. That's what I wanted to hear. I wanted to hear more than 2 years. Ed, I'll follow up with you after the show. It's a great call. And I'm Harvey Freed, and I'm definitely going to be your loan officer. So thank you for the call.
Harvey, did you watch BJ and the Bear when you were a kid?
I did.
The rig. Harvey. I love it, Harvey. That's good.
You threw it out there, guys. Hey, one more call here. Let's sneak this one in. 248-539-9797. Love to hear from you this morning. Mike from Detroit. Go ahead, sir. How's it going, Mike?
Hey, how you guys doing?
Morning, Mike.
I had like I said, just one big question and perhaps a smaller question, I'm not sure. But I came in and you guys talking about homes being appraised for less than what the seller's trying to, or
that's Harry's favorite subject.
It's my favorite subject. Go ahead.
Harvey's pulling his hair
I'm
out.
trying to sell my home, and I talked to my real estate agent. She didn't really get into that too much, but she gave me an idea how much I could sell it for, which is like $230.
Okay.
My last tax assessment I had said that the tax is $100,000, so I'm assuming
that's $200.
$200.
Yeah,
but I
that's in the
wasn't
ballpark.
Sure correlate the exact value of my home.
Well, the SEVs are not scientific by any means, and in fact, most people would rather pay with their SEV if they want to times it by 2. In your case, your house could potentially be worth $230, not the $200 or what you're thinking on an SEV. Here's what your house is worth. First of all, are you in a subdivision with other similar homes?
Yes.
Well, there you go. Yeah. Those homes that have sold within a square mile of your house, within 1, 2, 3, 4, 6 blocks of your house. If there's a good handful of them that have sold recently in the last 6 to 12 months, those are the comparable sales. That's what your house is worth.
And I was going to ask because a house that was a little bit down for me, within 6 homes sold for $195, and then a home behind me sold for like $250. And they were pretty. My house fits like right in between as far as size.
Yeah, I mean, sounds like you have some great comps. Yeah, it sounds like you have some good comps. But what we do now is not only do in this market, we look at the solds, we look at what's active in the area, and we see is there any other competition. There might be some people that if there's not much going on there, we put that price up a little bit higher, and it might be inflated, but it's a better way to command more money. And then, like we talked about earlier, worry about the appraisal later. So sometimes when there's a lack of inventory. In certain areas, you can raise the price.
So, Mike, have you made a decision that you're going to move?
Yeah, I actually already moved from my home.
Then put it up
for the last year and a half.
Yeah, put it up. Let's go. Don't wait.
Yeah, and I'm like, there's no better time than now. And then my other question was about just like tax information. I've been getting conflicting things about I don't have to pay taxes on the earnings, but I may have to pay taxes. I'm not sure exactly.
Did you buy another house?
No, I'm renting a apartment.
So depending on what you purchase the house for, what you sell the house for, there could be some tax implications there.
Yeah, I purchased it for $140. I owe like $128.
Well, you might have a capital gain there.
Yeah. Buy something within 2 years.
We're not accountants or CPAs on the radio either, so I would direct you to them.
Yeah,
but
whether or not you live there or not, it's going to play a part of that. So,
yeah, but you're going to have there are going to be tax ramifications.
Great question, Mike. Really appreciate you calling in the show. And if you want to join the show, give us a call, 248-539-9797. We're up against a quick break. When we come back, all of your calls.
Hi, Harry Glanz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Grosseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Welcome back to the show, 946 if you're just joining us. We are brought to you by Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. You're going to save a ton of money, get a great rate, really increase your knowledge of home ownership, and that's the key, be a successful homeowner. Got a couple of events I want to bring up that Capital Mortgage is sponsoring and involved with this week. The Bridal Show is back. That's right to all you ladies out there and men out there. Go check it out. It's going to be held this week. Thursday at the Weston Book Cadillac. From our office, Becky, Lisa, and Diane go every year, and it's a lot of fun. They meet a lot of great people. And, of course, yeah, it's fun to have a wedding and spend lots of money on your wedding and the flowers and the band and everything, but it's really cool to have a home with your spouse and your new family. So pretty cool stuff. If you want to find out how home ownership will work for you and your spouse, be sure to check out the Bridal Show, and Capital Mortgage will be there. Then one other event, Alex, actually you're involved with it. Is that the Madison Heights School?
It is, yes.
You got the golf outing. Okay, cool. Jim Myers. Does everyone know? I didn't know, Harry, until you just told me. Jim Myers, better known as George the Animal Steele, the famous, the great, the Madison Heights legend.
He passed away.
He passed away. He's having his the memorial golf outing out there.
It's a foundation golf outing. It's going to raise money for the school district, Madison Heights, and it's a great event. And Alex is very tight in there, and we do a lot of great work out there, and a lot of great people.
For the younger listeners, George the Animal Steele, before it was WWE with Brock Lesnar and all that.
Yeah,
this guy was in like the Hulk Hogan era.
He was actually, I think, before even.
And
they really got right.
He was right in our backyard.
Yes.
He was
great.
He was from Warren.
Great guy.
Yeah, local guy, Madison Heights.
He taught at Madison Heights.
So it's just
Josh Taylor's uncle.
Oh, it is.
From
Okay,
Skyward,
cool.
yeah.
Oh, awesome. Good stuff. So a lot of local connections here. Hey, that golf outing's on Monday, so it's over at the Cracklewood Golf Club. Give Cracklewood a call. See if they have some openings up there. Again, money goes to a great foundation, Madison Heights Schools. And again, so many great things out there locally. Let's move off to some calls here. And if you'd like to join the show, 248-539-9797. We got Jerry out there. And good morning, Jerry. Welcome to our show.
Hi, how you doing?
Good morning,
Jerry.
sir.
Good morning.
Good. If you want me to get right into the question, I
Sure.
take it?
Yes, sir.
Okay, I own a house, and I just have purchased a condominium in Walled Lake, which is actually on Walled Lake.
Nice.
Took the money out of my retirement account, some of the money, to do a cash deal. Now, my question is, I want to put the money back into my retirement account. So I want to find out if I could need a home equity loan, or I need a mortgage, or what I need.
No, you need
I don't know if you can help me with that.
I would take a first mortgage. I wouldn't do a home equity loan because a home equity loan is going to fluctuate. I would do maybe a 15-year or a 30-year fixed. You can go to 80% of the acquisition cost. We do need an appraisal, and and pay yourself back. It's a pretty simple transaction.
How much is the amount? How much is the amount that you took out?
I took out. I put 5 down. I took out approximately $90,000.
The Detroit Tigers live here.
97.1 The Ticket.
Welcome back to the show, 947 if you're just joining us. And not too bad outside. It's warm, that's for sure. July 22nd, 2017 in Southeast Michigan. Go out there and hit the balls around. Have some golf. Go fishing. Do something fun. How about buy a house? Call Capital Mortgage Funding. Ronnie J's in the office. He will get you an approval letter right away. Just call 1-800-LOW-RATE. That's 1-800-569-7283. You can get an approval letter today. You can gather your documentation up and go out there and have a real approval letter and make an offer with confidence. Deal with the real professionals at Capital. That's the key.
And also, if you don't want to call in the show, you can watch the show on Facebook Live right now. You can hit us up on that. And also on Twitter. We don't tweet, but we have people that do. We have social media experts because, I don't want to get into a Twitter war with anybody. But if you go on Facebook Live, you can like us on there. We'll send you we can send you updates if you want, but just check us out on Facebook Live, Facebook, and Twitter.
Like our page. You can always de-like us if it doesn't work out.
Or if you don't like us. How does that work?
Your comments. Cheers to the region. I like this. Cheers to us folks here in Michigan. What a great state we are. Would you believe this? That's right. We're back to work here. We're working overtime. We salute all of you folks that have been making your payments on time because we did not make this list. This is the bad list. This is the list of the 5 states that are still leading the way in foreclosures. We are not on that list.
We used to be on that list, which was we were at the top 1, 2, or 3, and now that we're not because, like I said, we've come back. Our property values have come back significantly. We're in a great shape here. And again, as we said, and we always give you the honest, hardcore truth, we're always the first ones to go in and the last ones to come out. But life is pretty good in southeastern Michigan, the whole state of Michigan right now.
I sort of go backwards. Number 5, Connecticut, 4, Illinois, 3, Maryland, 2, Delaware, and 1, New Jersey. Of course, New Jersey. It's hard to keep up with the Joneses. I mean, you got to really work hard. You overpay for your house in Jersey. You're at the nail salon. I didn't say that, did I?
Oh, man.
I didn't say that.
Yeah, New York, your bigger brother right there.
Hey, refinance your home. There's so many great opportunities in here. Of course, at Capital Mortgage Funding, we'd love to help you save money on a refinance. For years, you've heard us talking about what we do for families. We've urged families to take a look at lowering their term down to a 15-year fixed. Take a look at whatever you're doing out there. If you want to consolidate your first and second mortgage and drop it to a 15-year fixed.
But Harvey, it seems in vogue now to talk about shortening the term to a 25, maybe to a 20, to a 15, when we've been saying that for years. Years and years and years ago, it used to be other people would say, oh, go on an ARM, go on a 3-year, 1-year ARM. What are you, nuts? Now, all of a sudden, people have come back to reality, and we're talking about fixed-rate mortgages. We've always promoted a fixed-rate mortgage. 80% of the people out there should be in a fixed-rate mortgage. The other 20%, if you're not going to be in the house for a long period of time, if and only if you can commit and say you're going to move within a certain period of time, should you not be on a fixed-rate mortgage. That's the way it goes. Play it safe. Don't roll the dice with your house. That's not a good place to gamble, okay? Stay on a fixed-rate mortgage. Lay your head down on your pillow at night and make sure that everybody's safe and sound and that you can pay that mortgage payment every single month. And we'll set you up for success with that, Harvey Freed.
A couple other things to get to. New construction locks here. Of course, we're doing quite a bit with new construction out there. If you've just stumbled upon a builder and they're going to start building the house, of course, you can do a 6-month new construction lock with Capital Mortgage Funding. Right. We take the deposit. It has a free float down option, which is unbelievable. Yep. That means that if we happen to lock in, to use round numbers, at let's say 4.5%, and the market's 4.25%, you can within I think it's 30 or
within
60 days. 60 days, you can go ahead and lock in and take even
the lower
rate.
And there are no fees, okay? So we talked about this on the show 3 weeks ago. There are no additional fees on this. What you have to do is you have to pay a 1% of the loan amount deposit. That deposit goes towards any closing costs, and it's credited at the closing, so it's not an additional fee. What you're paying up front on that deposit is the privilege to lock in that rate for 180 days with a float down option. So you're locking in what the rate is, and then if it goes down, that's the insurance policy. Bottom line is that we can lock you in right now for 180 days.
And that's good. Great news. We got some open lines here, 248-539-9797. We'd love to hear from you. Of course, Dan Dubensky from Skyward Realty. Already starting to talk about, Dan, thank you for bringing up Arts Eats Beats, and if I got that wrong.
Arts Beats and Eats.
All right. So that's going to be exciting. We got so many great things coming up here. Of course, the weather has been very good this summer, and again, we don't want to jinx that, so let's just keep things moving in the right direction.
I'm hungry right now.
84% of Americans say home ownership is a good investment, yet housing affordability has been a little bit of a problem. We've talked about it so often on the show that one of the major hurdles has been student loan debts and things of that nature. But more importantly, what we're seeing out there, Dan, and this keeps coming up, is it probably will make sense for you to purchase a house with today's low interest rates and maybe pay $10,000 or $20,000 more to get a house that's not a money pit, to get a house that's going to keep your finances low, where you don't, maybe it's got newer items, you don't need a complete appliance package, it doesn't need a new roof next year, things of this nature.
You know, each individual case is different. If you are a handy guy, then go in there and you can have that instant equity, putting the time and the effort and some money into your house.
Yeah, great point.
If you're someone who, and I learned this the hard way, you have to know what you're worth, dollar per hour. If you're trying to do that and you don't know what you're doing, but you can make more money at your job, go to your job.
That's right. If you're not a handy guy, you shouldn't take on a project. But we had a closing on Monday. Guy's a real handy guy, works at a construction company, works in his family's construction business. He bought a house that needs a lot of renovation. He saw through all that. He knows that he can make this property into what he and his wife want it to be, so he's going to be the guy. Now, I don't know if I want to live, even if I were really handy, you know how it is with the shoemaker's kids. right? They don't have any shoes. But if I'm a handy guy and I can do all the work and I can put it together, I mean, why not take a look at that property and do it? I think it's phenomenal.
You know, it's interesting, this HGTV channel.
Yeah.
You see a lot of people, and so many people watch that.
Right. Everybody thinks they can fix up a house.
So, and we're seeing it now. We'll go into these new home fixer-uppers, right? And it's the guy and his buddy who saw the show.
Right.
And they decide to buy something. What they don't tell you on that show, they show you what they bought it for, what you sold it for, and they say that's the profit. You don't have transfer tax. You don't have commissions. You don't have,
how about delays,
costs.
even in construction delays?
And
carrying costs.
Right. So some of these you see in the workmanship is so bad. It's someone who tried something thinking it's easier than it is, because it's really not that easy.
How about hitting your hand with the hammer when you're going to nail something, because you don't do that every day? How about that?
I'd be good with the sledgehammer part.
How
about
falling off the ladder? How about falling off the ladder? Right? How about doing that?
Maybe you won't fall off the ladder straight.
You know, it's interesting. We see more and more of these.
Do you know why I'm not falling off a ladder?
You're not getting on it.
Because I'm not going on a ladder. That's why.
Well, let me say this, because this will ring a bell to somebody out there. 248-539-9797. You can always call Capital Mortgage Funding. Here, someone asked me, say, Harvey, I'll use round numbers. I'm $150,000 approved. That's where I want my house payment. But they're not finding what they want. And we spoke about this just yesterday with a client. I said, well, if you went up to 160 or 170, let me show you what those numbers could look like. What people need to know is with today's low interest rates, and again, this is a raw number, it's about $50 for $10,000 more.
Going out one night, right?
Yeah, it's okay, $20,000 more of a house, purchase price. Maybe you're financing $20,000 more. It's about $100. Maybe the taxes are a little more. Maybe it's $100 difference a month.
Harvey,
that's a big difference.
On a $165,000 mortgage, approximately on a fixed rate, Ryan, the payment is $787.
Money's still cheap.
$787. I'm $165 now. If you're renting and you're renting at $1,000, okay, I know we have taxes and insurance, there's upkeep and everything like that. You have to take a look at it. If you're paying $1,000 a month rent, you can afford $150,000 to $165,000 mortgage payment.
Yeah, I mean, again, $10,000 is maybe $50, $20,000, maybe it costs you another $100 a month. Versus maybe going in where you even have to go borrow $5,000 or $10,000 to do these home improvements. That's $80 to $100, and that's toxic debt. That's something that you can't write the interest off. So maybe buying that little bit more expensive house sometimes might work out better for you. All right, that music tells us that's the end of our show.
Are we done already?
I was just we got so much more to cover. So
hey, the guys in the booth behind the glass are saying, "You guys are done. Get out. Let the pros come in." We got Pat Caputo coming up. He's a pro.
Yeah, we do have Pat Caputo, and we want to thank Dan Dubensky, obviously Skyward Realty in downtown Royal Oak on Washington.
Yep,
go down and see them. And again, if you need an approval, call Capital Mortgage Funding at 1-800-LOW-RATE, the best mortgage banker. For Harvey Freed and Harry Glanz, we'll see you next Saturday. Keep it here on 97.1 The Ticket.
97.1 The Ticket.
Hi, Harry Glanz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.